Okay, hi everyone. Hi. Just give me a sec to share the screen. Okay. Hi Damir. Hi Ebenezer. Hi. Can someone type in the chat box so that I know the chat box is working? Hi Bri. Hi James. Hi. Okay. I'm gonna start today's webinar. I hope everyone can see my screen and hear me clearly. Once again, everyone, welcome to today's webinar brought to you by IronFX. We are doing a trading strategy clinic today. So trading strategy clinic basically means that we're going to go on the charts, look at some setups, and I'll show you guys my trading strategy. Basically, that's why it's called trading strategy clinic, because I'm sharing my strategy with you guys. Risk warning and a disclaimer. Please read both the risk warning and the disclaimer. Anything that I share with you guys in this webinar should not be construed as trading advice. Please take this purely as educational. Okay, this is not an investment kind of webinar. It's not, don't take this as trading advice, don't take it investment advice, or don't take it as financial advice. Please take this as purely educational. Nothing that I share here is about forecasting or signals. This is not a signals or forecasting group. On top of that, another risk warning is that trading Forex and CFDs carries significant risk and may not be suitable for all investors. So please, please, please be cautious when you are trading. Another thing is, oh, hi, Riaz, welcome, welcome. Another thing is, whatever I share with you guys in this webinar is purely my own. Hi, Bali, welcome. Purely my own experience and opinions. It's not necessarily those of IronFX. So yes, please take this purely as educational. Okay, let me introduce myself. My name is Cassandra. You can call me Cass. I am a prop trader at an award-winning research firm here based in Singapore. Okay, so I'm from Everest Fortune Group. Everest Fortune Group is a award-winning research firm. We're the finalists for the best Forex and equity research for 2019, 2020, and 2021. 2022 is not out yet, that's why you don't see us posting it there. But basically what we do here at Everest is a lot of research, a lot of back testing to see where the markets are going, okay? Then with this forecast, okay, with the forecast of where we think the markets are going, we then advise hedge funds, brokerages, financial institutions, and you guys here on these webinars on where we think the markets are going. But please do not take this as a forecasting or a signals group. Once again, please take this purely as educational. Okay, other than that, I am a full-time prop trader, and I personally am managing quite a bit of funds. Okay, and to be a prop trader, for those who don't know how prop trading works, you first need to take a test. You need to pass the test before you get funded. Okay, so how this test works is you need to do 8 to 10% profit within the month. Okay, 8 to 10% profit within the month to be funded. Okay, it's not that easy on a monthly basis. About 3,000 to 4,000 traders take this test, and I think only less than 2% ever pass this test. So it's not that easy to pass. So how I did it is by using technical analysis. So I am a technical analysis specialist. If you guys have any questions regarding technical analysis, please ask in the chat box, okay, so that I can help you with technical analysis. Okay, let's move on. So our agenda for today, we're going to go to TradingView later. We're going to look at some charts. We're going to look at some key approaches we take in trading. I'm going to show you guys how my strategy and how I usually trade. Okay, then we're going to go, before that, we're going to go through a cheat sheet checklist that I will show you in the next one. And then we will take the markets on together by doing the analysis and whatnot. Okay, so this is the checklist. This is what it looks like. If you guys need me to stay here for 1 minute or a while, I will. I can stay here for a while. Okay, basically, I use this checklist to help me find profitable trades. The first thing I'm looking for is, are there any horizontal levels? So when I am going to the charts, I'm looking for horizontal levels. I'm looking for trend lines, channels, any chart patterns, any death or golden crosses. These are indicators. Any natural moving average, any stochastics, RSI, any bullish or bearish divergence, any correlation. Correlation meaning that, let's say I am trading USD CAD. I want to go and look at oil, for example. Why? Because Canada is a very big producer of oil. Okay, so if oil prices go up, usually Canadian dollars go up as well. If oil prices go down, usually the Canadian dollars will go down as well. So there is correlation there. Another very correlated pair is the AUD and the NZD, and GBP and EUR. These are very correlated pairs. So usually if AUD is going up, NZD is also going up. If AUD is going down, usually NZD is also going down. Hi Joseph, welcome. Welcome to today's webinar. Okay, after you're done with all of this checklist, everything, you will look for reversals and we will look for breakouts. Okay, and then that's how we look for our trades. So I will show you today how I usually look for my trades. Then we'll see how that goes. The other thing I want to show you is very, very important in trading is Fibonacci. So we will be also using Fibonacci in our trading style and our trading strategy. So there's 4 kinds of Fibonacci. The first one is Fibonacci retracement, Fibonacci projection, Fibonacci expansion, and Fibonacci extension. Okay, I'm going to stay here in case you guys want to look. So retracement means the levels between 0 and 100. If you're not very familiar with Fibonacci, I cannot explain it to you today because today's topic is not Fibonacci, but basically you just need to know that today we will be using Fibonacci. Okay. Next thing is expansions and extensions. It's another kind of Fibonacci. After we're done with this 4, if we can combine all of them together, or at least 2 or more of them together, it will be called a Fibonacci confluence. Then we find a confluence to find where the most likely entry will be. Okay, everything I'm saying is very important to find your entry in trading, your exit in trading, and your stop loss in trading. If you do not have an entry, stop loss, take profit, you do not have any trade. Okay, if you do not have entry, stop loss, take profit, you basically do not have any trade. Okay, so that's it for the introduction. This is the disclaimer for those who just joined. Remember, this webinar is purely educational. Okay, other than that, I'm gonna stay on this checklist for like a minute or two. I'm gonna take leave this here for 2 minutes. You guys can take a picture, write down some notes, up to you, and then we will go to trading view. Okay, so I'll come back in 2 minutes. I'll give you guys some time to note down. Okay, everyone, I'm back. Okay, Riaz is asking, can I get a recording of this? You can email IronFX customer service and they can pass you the recording, or I think this is because this is recorded, right? They usually do post it up somewhere. I think it's usually YouTube. Correct me if I'm wrong. Do you guys, for the rest of you, if you guys know, I think it's on YouTube, on IronFX YouTube page. You can go and retrieve the video there. Okay, so I hope you guys wrote this down or took a picture or something, because this is going to be very useful for your trading. I'm going to go to trading view now, and then we can do some analysis on some charts. Okay, give me a sec, guys, to pull out trading view. Okay. This is my trade from yesterday. Looks like price is at my buy entry right now. Okay, I don't know if you guys want to consider this. Okay, before I even, I'm going to tell you how I got this trade yesterday. Okay. If I didn't mention early on, I'm actually a gold trader. So I trade a lot of gold. It's not that I don't trade other things. I trade gold and Forex most of the time, and a little bit of cryptocurrency. Okay, so I'm going to explain a little bit about how I came up with this goal analysis because it's still valid. So I don't want to reanalyze because it's still valid, right? Okay, so basically everything we do here in trading is very logical, and everything we do in trading it has basis. Okay, so there's nothing in trading that is feeling. We don't feel like, oh, there's nothing here that is about feeling. Okay, there's nothing about like, oh, I think price is going to go up. Oh, I think I think that, oh, my friend told me that price is going to go up, or blah, blah, blah. Okay, there's no such thing in trading. In trading, everything must come with a reason. That's why I wrote here, area to consider for buy and sell. I wrote 1984 to get in for a sell. So if price reaches 1984 area, I will consider a sell. Or if it's a break of 1936, okay, so if it breaks here, basically, this area I'll consider a sell. So why do I consider a sell from that area? So number one, Ichimoku is bearish. Okay, so Ichimoku, the indicator Ichimoku is showing that price is bearish. Number two, RSI is showing a bearish divergence. Okay, number three, there's a possible bearish divergence on stochastics as well. Okay, so you have to wait for the confirmation. That means you see this yellow color circle that I highlighted here. It needs to break to confirm the sell. Okay, in this case, it doesn't look like it broke. Okay, wait for breakout of support, wait for breakout of trend line. So it needs to break both this support and this trend line for the sell to be valid. Okay. Number two, this is my number two scenario. I get in for a buy at 1936 area. Okay. Area meaning this blue area that I highlighted. Okay. It's because support and resistance is never one single price, it's always one zone. Okay, so the zone is the area that you will be considering your buy entry. Okay, so why do I want to consider a buy from this area? Stochastics reaching a support level. Okay, trend line breakout pullback. So trend line breakout pullback is this. There's a trend line, there was a descending trend line. Price broke out, it broke the downtrend, it pulled back. Usually at the pullback, you enter here for a buy. Okay, usually at the pullback, you enter for the buy. Okay, so this analysis, okay, sorry, we will be reanalyzing because this analysis, I did it on Monday actually. This trade was for Monday, this is not recently. Okay, but I just want to explain my train of thoughts first, and then we can reanalyze, and I'll show you how to get all the reasoning and come up with all the processes and the strategy that I use. Okay, so confirmation, wait for reversal pattern candlestick. So do you see that there was a reversal pattern candlestick here? There was a doji followed by a spinning top. There was a reversal pattern candlestick. So this area was a very, very good area to enter for a buy. Okay, on top of that, there is an ascending trend line. Okay, there's an ascending trend line here. Do you see this big ascending trend line? But it looks like price recently broke this area again. So it looks like we do need to reanalyze to see where price is going at its current point in time. So I was leaning to a buy, leaning towards a buy, but you have to wait for confirmation. Can use a tight stop loss and a small lot if you are willing to risk for this trade. Okay, so I'm going to get rid of everything, then we're going to reanalyze this chart. Okay, so whenever I am, remember today's topic is trading strategy cleaning. Okay, so the whole purpose of today's topic is to share my strategy with you guys. So this is how I usually strategize. This is how I usually do it. Okay, so the first thing first is I go to the daily time frame. Okay, this is the first thing I do. Step number one, go to the daily time frame. What am I doing on daily time frame? Remember the checklist that we have. We are looking for support resistance. We are looking for trend line. We're looking for channels. We are looking for whatever information that we can find on the charts, and then we're going to come up with a decision. Remember that everything we do in trading is all logical. Okay, it must come with evidence. It must come with support. Okay, so if we want to go in for a buy, you must tell me why you are going in for a buy. If you're going in for a sell, you must tell me why you are going in for a sell. Okay, everything must have reason. Okay, so let's start with the daily time frame. The first thing we're going to do is look for trend. Trend, the first thing you want to do is answer the first question. Question number one, is price going up or down? Can you guys let me know in the chat box? Does it look like price is going up or down? Let me know in the chat box so I know if you guys are still following. Anyone? Okay, cool. It is going up. So why is price going up? Why do I say price is going up? Because we pull out our pen, you can see price is making higher highs and higher lows. Okay. Do you see? The highs are getting higher. The lows are getting higher as well. So price is moving in uptrend. So step number one is to identify uptrend or downtrend. We already answered step number one. So usually I'm going to go step by step so that if you guys are a beginner here, you guys it'll be easy for you guys to understand. Okay, so we start with the daily time frame. Question number one, uptrend or downtrend? Okay, we already answered this. It is uptrend. Okay. Question number two. If it is moving in an uptrend, are there any trend lines or are there any channels available? Okay, so let's pull out the channel and try to fit everything into this channel and see where price goes. Okay, remember channels and trend lines are just guides. They are not very definitive. They're just guidelines. You know what? It looks like price is trying to break out, right? Okay, price is at a deciding point now. It is at the bottom of the channel. So price can do two things from here. Number one, it can reverse. Okay, that means price continue to move within this channel. Okay, or number two, it is going to break up from here. Okay, I don't know if price is going to break up, or I don't know if price wants to continue moving in the channel, but now our job as a trader is to collect all the information and the data that we see on the chart so that we can make a decision on what we think is going to happen. Okay, so now that we have found our channel, valid channel has two touches on top, by the way. Okay, the top has 3 or 4. Minimally, it must have 2 touches on top and 2 at the bottom. So there's one here, and then there's one forming here. So is this channel legitimate? Is this channel, can we use this channel? Let's find out what is the decision. Sorry, let me redraw the channel. Depending on how you draw the channel, there is a bit of room left for price to go down. Okay, never mind. We're gonna like skip the channel because the channel is not fitting very well. And it's at a deciding point. So now we're going to pull out support and resistance. Remember the checklist. Okay, the checklist, we're gonna follow the checklist. The next step on the checklist is to look for support and resistance. Okay, so do you guys need me to zoom in? Can you guys see clearly? I'm gonna zoom in so that it's bigger for you guys. Okay, we're gonna highlight some support resistance. How does support resistance work? This is where current price is. Okay, support is at the bottom of current price. Resistance is at the top of current price. Okay, how do you spot support resistance? It's very easy. You look for swing highs and swing lows. Okay, I see there's a resistance here. And then there's a support here, where current price is right now. So price really is at a deciding point at this current point of time, because we don't know if it's going up or down for now. So we're gonna collect some data and then we're gonna decide whether price is going up or down. Okay, I think that's most of the information I can collect. Let me see if I can find some Fibonacci levels. Nope. Let me see if I can spot some Fibonacci levels. This is the 50%. Yep. Price is at the 50% Fibonacci level now. Okay, so price is at a deciding factor now. I'm going to go down to the smaller time frame so that we can see what the small time frames are showing us. Okay, I'm going to highlight this area because this area is where the Fibonacci is. This is a very huge area, actually. Let me try to narrow it down. Okay, if I have to narrow it down, it would have to be somewhere around here. Okay, cool. We're on the 4 hours. We're going to see what other information we can find. I'm going to look for more Fibonacci levels. Okay, for those who don't understand why I'm using Fibonacci levels, I'm going to explain it to you in a very simple analogy. Let me use this smiley face. Okay, this is Bob. Okay, so Bob, he is walking Okay, he's basically walking to the left. Okay, sorry, to the right. He walks, and then now he reaches a door. Actually, let's just use this guy, sorry. Okay, this guy is walking to the left. Okay, and then before he's walking, but he reaches a door. I'm trying to give my analogy. Okay, so he reaches a door. There's a door here. Okay, so when he reaches the door, he's trying to open the door, right? My question is, if the door is locked, if the door is made out of very solid, heavy material, if the door is, there are very heavy boxes behind the door, this guy here, he can keep pushing the door and the door is not going to open because that door has a lot of resistance and that door has a lot of barrier. Okay, but if he reaches this door, the door is unlocked, there's nothing behind the door is made out of very light wood, it's hollow. He's going to open the door and then he can go into the next room, no problem. Okay, that's exactly what I'm trying to do here with the Fibonacci levels. Okay, so we already identify our door. This direction identifies where price is going. Okay, we already identified our door. So all this support and resistance is the door. Price is the man that is walking towards. So if price is going down, that means it's walking downwards. If price is going up, price is walking upwards. Okay, the guy is walking upwards. Then when it reaches the support resistance, it's reaching the door. So what does Fibonacci do? Fibonacci, the more Fibonacci levels lining up at your support and resistance area, it means that your support and resistance area has more resistance and has more barrier. Okay, so if it has a lot of barrier, if it's very heavy, it's very hard to break, that means when price gets here, it will have no choice but to reverse. Why? Because when price reach here, it keeps trying and trying and trying, but it cannot break this area. This area has so much barrier, price cannot get past this area, so it's going to reverse. Okay, so when it reverses, as a trader, when price reverse in this support area, I, as a trader, I am going to get in for a buy entry. Okay, I will enter here for a buy entry. That's why you need to identify the door first. You need to identify the support and resistance first. Okay, if you already identify your support and resistance area, okay, for example, you already identify your support and resistance area and you find that there is no barrier here, there's no resistance, this is a very easy area to break. When price gets here and price breaks out because it's so easy to break, you will enter here for a sell. Okay, you enter here for a sell. Okay, why did I draw it this way? Because usually after a breakout, price will come back, retest the area that it broke, and then from that area, then it will continue in the direction that it broke. Okay, usually, not all the time, but usually it does. Okay, so we've already identified our support resistance. Now I'm trying to measure the strength of the support and resistance so that I can know if price is going to break or is price going to reverse. Okay, so just now we already found the 50% Fibonacci retracement here. Let me see if I can find any other Fibonacci levels here. So I'm using a Fibonacci projection. Fibonacci projection, there are three levels that we look at. Number one is 61.8, 78.6, and 100%. So 100% is not relevant to us because it's too far away. 78.6 is too far away as well. 61.8, can you guys see how 61.8 lines up exactly in the zone that we are talking about? So right now, this zone is giving me I'm very comfortable with this zone. That means if price gets here, I have a very high bias that price is going to bounce, and here I'm going to enter for a buy. Okay, here I'm going to enter for a buy. Okay, cool. Let me see what other levels I can find. There's probably another Fibonacci here. Let me try. Okay. There's a 78.6 Fibonacci projection lining up in the same area as the 61.8 Fibonacci projection and lining up in the same area as the 50% Fibonacci retracement, giving me confidence that this area is in fact an area of significance and it has a lot of barrier. Therefore, I do want to get in for a buy at this area. So let me pull up my notes just now. Where is the notes? Oops, sorry. Where's our notes? Okay, never mind. Let's write down our notes. Okay. So bias for a buy. Reason number one, 50% retracement. 19. What number is this? Okay, the other thing is price came here one time, two times. This is a fake out three times, I guess. Okay, we'll just consider this whole time one time, two time, and now rejecting for the third time. So if we're not considering this time here, price came here twice already and rejected. Okay, so okay, so now I already have my bias on where I think price is going. I want to enter here for a buy. Okay, I want to enter here for a buy. I'm a bit biased of a buy, okay? But there are a few things stopping me, obviously. Okay, the few things that are stopping me, number one, price is making lower lows, making me think that the bearish momentum, there is bearish momentum, okay? But it didn't, sorry, lower highs, but it didn't make lower lows, so I think that's okay still. Okay, now that we have our bias on where we think price is going, we have our buy entry. Remember, when you are trading, you need a buy entry. Sorry, not a buy entry, an entry. It can be a buy or a sell. You need to identify, number one, are you going in for a buy or sell? So we already did that. We already identified that we're going in for buy. Okay. Number two, where is your take profit? Okay, so the take profit, I'm going to put it at the nearest swing high or swing low, or the nearest support resistance. So the nearest one is this one. There's a swing high here. This is the nearest one. This is going to be my take profit. Why am I putting my take profit here? Because price is very attracted to key levels. Key levels meaning your support and resistance area. Okay, they are very attracted to key levels. And therefore, it's like a magnet. So it's kind of attracting price to that area. So there is a high chance price might go back to this swing high area. Okay, so when it goes back to the swing high area, it will hit my take profit and then I will be in profit. But obviously, if the swing high is here, we don't aim for the highest, we bring the stop loss, the take profit a bit lower, because just in case it missed, just in case of spread, just in case of a few things. Okay. Other thing is my stop loss. So I already bought my entry, my take profit. I now need my stop loss. If you do not have these three things, you do not have a trade. Okay, you need an entry, you need a stop loss, you need a take profit. If one of it is missing, you do not have a trade. Okay, you need to know where to get in, you need to know where to get out. If you only know where to get in, but you don't know where to get out, you're not going to make profit in trading. You can make profit one time, you can make profit 2 times, but after that, you're going to start losing. Okay? Okay, my stop loss, where do I put it? I put it below this swing low here. Okay, why do I put it below the swing low? Because again, price is attracted to key levels. So if this is price, maybe it does a fake out, it will reach this swing low area, but it will miss your stop loss, okay, before it turns back. Okay, so that's why I put the stop loss at this area. Okay, then this is my bias of where I think price is going for gold. Okay, before enter for this trade, before you enter for, please do not take this as a signal or forecasting group. Okay, this is not a signal. Okay, I'm just showing you how to get the trade. Okay, now we have our trade. Do not enter first. You see here, there's indicators here. We need the backup of the indicators. Now I think that price is going to go up. I need to see what the indicators are saying. So let's say RSI. Let's pull out some of my favorite indicators. RSI, stochastics, and Ichimoku. Later I'm going to pull out DMI as well. Okay, for those who don't know how to use Ichimoku cloud, or for those who do know how to use Ichimoku cloud, you know that Ichimoku is a trend indicator. Okay, Ichimoku cloud is a trend indicator. It is a lagging trend indicator. So if price is below the cloud, that means it is on a downtrend. If price is above the cloud, means it's on an uptrend. But you know the thing is, Ichimoku doesn't work well on sideways market. Okay, sideways market does not work well for Ichimoku. Okay, therefore, we can see that price is moving sideways here, right? It broke up, then it came back down, it broke up, then it came back down. So it's doing a lot of fake outs. So at this current point of time, I don't think Ichimoku is giving us accurate information. If the indicator is not giving you accurate indication, hi Nikki, welcome to our webinar. Okay, if an indicator is not giving us accurate information, we should not use the indicator. Okay, we should not use the indicator. So I'm going to get rid of that. Okay, instead, I'm going to see what stochastics and RSI are saying. Let's pull out stochastics. So the settings we use for stochastics is 21, 5, and 3. Okay, stochastics isn't saying much, to be honest. Might be a bearish divergence. Okay, give me a sec. Let's. Okay, I'm looking at the divergence check sheet, cheat sheet. I'm pulling this out so that you guys can know where to find it. So you can go to Google, you can just type divergence cheat sheet, and then you can just save any of this photo so you can use it. Okay, so what am I looking for? So we can see price is making a straight line here. Okay, there is a straight line here. Do you see? Price is just doing a horizontal area in this part. It's just horizontal, right? So the cheat sheet says if price is straight, but on the oscillator or RSI, stochastics, MACD, whatever oscillator you are using, it is making higher highs. Okay, it means that it is a bullish divergence. Okay, do you see? Price is doing straight here, but here it is doing an uptrend. Okay, it is doing an uptrend. So this gives me even more confidence to get in for the buy. Where is my... Okay, reason number 5 to get in for the buy. Bullish divergence. On stochastics. Okay. What did RSI say? Let's pull up RSI. Okay, so stochastics is showing bullish divergence. RSI is not showing divergence. Instead, RSI is just showing us horizontal levels. So there's two ways to look at RSI and stochastics. The other one is you use horizontal lines, or you use trend lines. Okay, so in this case, we're going to use horizontal lines because I don't see a trend line. Okay, so RSI is showing that price is at a horizontal area. So it is aligning with the charts you see here. When price came here, it reverses. Same for RSI. When price came here, it reverses. When price comes here, it reverses. Okay, when price comes here, it reverses. Okay, it's at a horizontal line. So RSI is giving us accurate information, so we will be using RSI. So when I'm looking at RSI, it's kind of telling me that it's going to be a bounce, or there is a bounce in fact. Okay, there's going to be a bounce, or is a bounce, or there is some kind of resistance in this area, or some kind of support in this area some kind of barrier. So making me believe that this is a strong area level to use, okay? So reason number 6 to get in for a buy. Support in alignment lines with RSI support, okay? Support lines up with RSI support. So right now, we have 6 reasons to get in for a buy from this area, take profit here and stop loss here. I would say this becomes okay, so this is exactly how I would look for my setups. Okay, this is exactly how I will for my setups. This is my strategy. Okay, this is my strategy. I hope price pulls to this area and then I take it. Now I measure my risk to reward. Because we have, for those wondering where I got that here, forecasting and measurement tools. Okay, click on it. You put long position. Why? Because we are going long, we are buying. If it's going short, if we are selling, then we put short position. Okay, long position. Then we put this. Okay, so can you guys see here? Risk/reward ratio 2.5. What does that mean? What does that mean? That means if you get in your buy entry here, okay, and your stop loss is here, your take profit is here, okay, it means if you have $100,000 account, you are risking 1% to make 2.5%. Okay, means you are risking $1,000 if price hits the stop loss. Okay, if price hits the stop loss, you will lose $1,000. Okay, if price hits your take profit, you will win $2,500. Oops, sorry, 2.5K. Okay, that's exactly how you calculate risk to reward. Only take trades that are above 1 to 2. Only take trades that are 1 to 2 minimum. Minimally. If it's 1 to 3, that's good. If it's 1 to 4, that's better. 1 to 5 is even better. But if it's 1 to 1, do not take it. Okay? 1 to 1 trade, do not take it. Why? Because 1 to 1 is like playing blackjack in the casino. In the casino, you put $100. If you lose $100. If you win $100. Okay, the payout is 1 to 1. 1 to 1 payout is not good because then you might as well go to the casino and play blackjack, right? The risk to reward doesn't make sense. Okay, the risk to reward doesn't make sense. Only take trades that are 1 to 2. Okay, also because if you think about it, let's say you take 10 trades and 6 of your 10 trades are winning trades. Okay, you have a 60% winning trades. If you win 6 times, you win 12%. Okay, why? Because each time you win 2%. Okay, but if you lose 4 times. So if you have a 6 out of 10 winning trade, means you have a 6 out of 10 losing rate. Okay, you win. That means you win 12%. But when you lose, you only lose 1%. So you only lose 4%. That means at the end of the day, okay, this is negative 4%. And at the end of the day, your total profit, total P&L, your profit and loss is 8%. Okay, so if in 1 month you take 10 trades, you win 6 trades, every trade give you 2%, you lose 4 trades, every trade lose you 1%. At the end of the month, you would have made 8% within the month. Okay, or maybe the week even. Okay, so that's why trading is actually, it's doable. It's very, very doable. But you need to use proper risk management. Okay, you need to use proper risk management so that you can get this kind of layout. Okay, do you guys have any questions for now? I have 2 more minutes with you guys, then I need to end the webinar. Do you guys have any questions for me? Is there anything that you are confused about? Anything you need me to clarify? Oh, one more thing. Actually, I want to look for DMI. DMI is showing a sell. But again, DMI is going sideways. So we're going to ignore DMI because it's not giving us accurate information. The other thing is that it is... do you notice that at the bottom of trading view, there's actually these circles here? All these circles are telling you when important news are coming out or when there is news that is coming out. Okay, so this lightning will give you some headlines for XAUUSD, and this will tell you when the news is coming out. So on the 13th of June, which is next week, okay, 13th of June, which is next week, we will know the inflation rate. They will announce the inflation rate, core inflation rate, year on year, okay, inflation rate on month. Okay, so then they'll tell you the forecast is 0.3, the previous is 0.4, the forecasted not out yet for this two, and then they'll tell you the actual. Okay, so usually when I see that there is going to be news event, I will not trade on that day because I personally am a technical analyst. I am not a fundamental analyst. I am a technical analyst. I do not use news to make my trading decision. I only use technical analysis to make my trading decision. Okay, other than that, you can press on this circle here to see what they have. Okay, so gold price at risk at free fall below 100 AMA. This 29 minutes ago. This is my daily FX. Okay, routers. Gold confirmed as dollar easers, focus on Fed cues. Okay, then there's more news here. So shares stall as bond market to reprice. Okay, so you need to take note that although our analysis is a buy, okay, daily FX is saying that it is now below the 100 days moving average, so you need to be careful. Okay, but doesn't matter if you use proper risk to reward. Even if you lose 1%. It's okay to lose in trading, but it's more important that you use proper risk to reward so that you can win it back. Okay? Okay, cool. That's all I have for you guys today. Thank you, everyone. Thank you, Damir. Thank you, Ebenezer. Thank you, Joseph. Thank you, Nikki, Riaz, Paul, James, Joash. Already said yours. Okay, sorry. Okay, bye, everyone. Thank you so much. Take care. I hope you guys have a profitable trading career. Okay, bye.